Yo, guys, let's get at least 10 individuals on the call. Share this call with whoever. Go on Twitter, retweet it, forward this link to all chats. I look forward to speaking with you guys here in just 1 minute. All right, we'll see you guys here in just 1 minute. All right. Welcome everyone here to another episode here at the Inner Wealth YouTube channel. My name is Bastian for all of you who don't know me, and welcome to another episode of Technical Tuesdays as well, right? So it's not just the Inner Wealth YouTube channel, but today we are back for, I think this is like our 4th or 5th Technical Tuesday. We started this journey about a month ago in regards to this call. And I've been getting a lot of really good feedback. There's been a lot of good interactions, really great quality questions. And I just want to say thank you guys for tuning in week after week and bringing really quality questions every week after week. So before we dive right into the charts, do you guys mind? Drop some 7s in the chat. If you guys can hear me okay, you guys can see my screen. Drop some 7s in the chat. If the music's okay, nothing's too loud, you guys can hear everything loud and clear, see everything nice and clear. Drop some 7s in the chat for me. Let's see. Just want to make sure we are all good. It's a little hard to hear me. Okay. That might be because the mic was a little bit further away than usual, but let me know. Is that okay? Like, can you guys hear me all right? I'm gonna try it right there. See if that works. All right, guys, drop some sevens in the chat if you can hear me loud and clear now. You guys can hear me nice, loud, and clear. I turned up my mic a little bit, turned on the music a little bit. I think we should be pretty good, ready to roll. Let me know in the chat. Some 777s in the chat. Cool. I don't see any sevens in the chat. I'm going to assume that we're all good. Let's go ahead and get it started. If you guys can't hear me though, if it's hard to hear me or anything technical wise, like drop it in the chat and let me know, okay? But for now, guys, I want to let you guys know the announcement that I had. I want to let you guys know here at the beginning of the call, and also I'll let you guys know for those of you who will tune in a little bit later at the end of the call as well. The announcement is all based on our 6-month program, okay? I know a lot of you may not know about this 6-month program, but twice a year I open up my personal student, or my personal, I guess, enrollment for 6 students, okay? Every 6 months I run a 6-month program, and my current 6-month program is coming to an end here in July, okay? Enrollments for this 6-month program will be going all through June, okay? And I will close the enrollment at the end of June. The enrollment will be over at the end of June, so you have all, the rest of this month and all of June to message me. Either you guys can message me directly, you guys can book a one-on-one with me inquiring about the 6-month mentorship. In the link on the description below, you guys can see that I will see a tab on the link that says inquire about the 6-month program. Click there and you and I will hop on a 15-minute call where we'll see if this program is actually something that best suits you. Now, I want to let you guys know, not everyone will qualify. Just being very upfront, not everyone will qualify. I'll ask you guys a specific amount of questions, and we'll determine that interview. It's like, I would say like it's an interview process. That first interview will determine whether you're qualified for the 6-month program or not. All right. It's very inexpensive. I'm willing to work with anybody. I want to make sure that you guys have the resources and are able to trade with, professionalism and without stress. Okay. So I'm willing to work with you. If you have any issues with the payments, I'm not going to be displaying live what the payment is. If you guys do have any more questions in regard to the 6-month program, please don't hesitate to hit me up. I do have students that have been in my current 6-month program. Out of the 5, this time was only 5. I'm opening it up to 6 this next time. But last time was only 5 people, right? And out of the 5 individuals, 1 person has reached profitability, consistently profitable for the past 2 months. All right, shout out to you, bro. You know who you are. All right, I'm very proud of you. And not only him, but many other individuals have reached consistent results. Maybe they haven't reached the profitability state, but they're definitely trading a lot less, more disciplined. They have a solid trading plan, and they have a plan to follow. Okay, they have journaling and the resources that I've accumulated over the past 4 or 5 years of my trading career. Okay, my goal is, throughout this 6-month program, is not to make you 6-figure trader. My goal throughout this program is to squeeze the last 2-3 years of my trading into a small 6-month program time period, right? And to cram all that information and experience into a 6-month experience. Okay, now I have found it very successful with our students coming out. They are trading a lot more professional. They are trading more themselves. They have found their edge. They have found what works best for them. And yeah, we'll stay tuned for the results. And I'll let you guys know more details in regard to the 6-month program. All right. So besides that, guys, let's go ahead and get going on the charts. All right. Drop some 8s in the chat if you've taken some trades this week. And if you have taken some trades this week, what assets have you guys been taking trades on? What asset have you traded this week? And let's review these nice setups that we've had this week so far. All right, so guys, DXY, right? We've been looking at the DXY for a while now. We've been following the targets. We took out April's high, right? And notice that we got not much of a rejection from that sweep of liquidity. So on a monthly perspective, I am still pretty long, okay? I do see us going for the longs. Now, here's something that's going to be crucial, okay, for this whole range, okay, from this high to this low. If on this range we trade and close sells on US30, that's awesome. EU, badass, cool. We'll review those. Okay, so if we trade up to this area, ideally that's what I like to see. But personally, if we get up to this area and close above this imbalance, not just get up to it but and reject, but trade up there and have a full body closure on a weekly perspective above this imbalance, okay? If we get that, me personally, guys, I'm going to be aiming for these highs right here, for these equal highs. Those right there. And reason being, because you got to understand, looking at this whole thing right here, you got to identify the liquidity, okay? And the liquidity is resting right here. And of course, you guys can see the liquidity resting above these highs. Now, if we continue to trade higher, okay, if we continue to trade the way we have and get a candle closure here above this imbalance here on the weekly perspective, I'm going to anticipate longs that will take these highs up here. Okay, let's put that on the weekly perspective. I will be anticipating longs to take out this entire range. Okay, I'm just looking for liquidity. Remember, if you get a liquidity sweep but no reaction, then you have to anticipate more liquidity in that direction to be sought out for. Okay, that is a very simple concept. And again, guys, like, we could get a small rejection here. You know, this week could be full of liquidity buildup. Like, we don't have to run for anything. One thing that I will tell you guys does get my attention is this imbalance that got left behind. Remember, this imbalance isn't yet completed. We can trade lower and, you know, close this entirety of the imbalance, but we have another 3 days, about another 3 days of trading sessions left, and I'm just going to keep an eye on this whole area. But this imbalance next week, we could just close bullish or in a doji this week, just to come back next week, take out previous weekly low, and then continue to the upside. That is something that can take place if we are looking for more longs, guys. All I'm saying is the liquidity between this high and this low, there's not much, right? So if we're gonna go down, we need liquidity to get taken out first. Or if we're going to turn around, we need liquidity to be taken out first. And there's not enough liquidity here to turn this thing around. At least there hasn't been a reaction that's given us a feeling that we're going to turn the whole thing around. David is asking, yes, I'm looking at the imbalance below. I'm in GU longs also. Nice. So yeah, we're looking at that imbalance, and then we're looking at this imbalance up here. So we have two imbalances that really get our attention. But this week, my eyes were at previous weekly high. We did achieve that fairly fast. Okay, so we'll go down to the daily, and you guys can see that I am aiming for this imbalance here. It's basically that same weekly imbalance, but here you can see it on a daily with a little bit more greater detail. So yeah, basically that same imbalance over there is what I'm looking at. In regards of the daily time frame, I want to see that imbalance get traded too. And yeah, I want to see what happens at this high. Okay. Like I said, if we just continue trading upwards, then throughout this monthly range, you have to anticipate there's not much liquidity throughout this monthly range, and you have to see in the liquidity or identify the liquidity, because then the range, if not, the range is the liquidity. So there's two things that I'm anticipating. We're either going to play around and consolidate here, move sideways, create liquidity to the upside, spike the upside, then move lower to the equal lows, or we continue to accumulate to the upside to take out this range and these highs. Okay. On a weekly perspective, I was looking here below that previous daily low on Monday. We did get that area, and Monday just kind of climbed up really, really slowly, right? I did share an area on Twitter that really got my attention, and it was this imbalance here, right? That bearish imbalance there, you guys can see it. Notice we come down, sweep previous daily low, then we trade higher, okay? Then we come down, pushing lower, but failing. We failed to create a higher high, yes, but we also failed to create a lower low. Okay, you guys see this failure to create a lower low? Cool. That imbalance that failed to create a lower low was also showing us at this point right here, when price action decided to trade through it, right? Not right here. Not this, right? Because this shows rejection. This shows we traded into it and rejected. Okay, that shows level of resistance. And this right here shows that the resistance wasn't strong enough for bullishness, right? So now we have traded beyond this bearish imbalance. And so we can anticipate that we can use this bearish imbalance for potential longs. Okay. And you guys can see here the longs that played out of that imbalance about 10 a.m. We come back down to it. We trade away from it. Right. And we just continue pumping to the upside. Now that was Monday. Okay, Monday we got some nice longs. Earlier today we got some nice longs into that area also. Now here's the kicker. Okay. Remember the power of three, the accumulation, the manipulation, the open, manipulation to distribution of orders. Okay. So basically what we're seeing is the open, we gave a manipulation to a level of resistance, which was that previous weekly high, and now we can anticipate some bearishness. If we are going to distribute from this area, if this is the internal liquidity level, okay, then we can distribute or anticipate some distribution to the downside. Now, I'm not saying that this is going to fall and melt for the rest of the week, okay, but that would be an interesting bias in seeing if price action comes down, goes up to a level of resistance and continues to move to the downside. Now, we could have the different scenario where we have the weekly open, right? We come down to a level of support and then accumulate to a level of resistance. So there's two different scenarios there that can play out, and we just continue moving to the upside. But my eyes go towards the downside a little bit, back into this like weekly or new day opening gap there that we had between that day of Monday and Tuesday. That gap right there, that new day opening gap gets my attention. That one. Very interesting area. Okay, we're gonna leave that area marked out. Personally, I want to see what happens in that area. Same thing with that bearish imbalance. If we were to trade below it, I'd look to trade back into it and continue distributing from that zone. Okay, so for now, shorts into that area just kind of makes sense in my eyes. We'll see what ends up playing out. But for me, ideally, shorts for the rest of the week. Okay, so tomorrow will really show us that. Now, if we don't get shorts for the rest of the week, then I'm still going to be looking at this imbalance here on the weekly. And I'm going to anticipate some consolidation, some sideways movement. Okay, so we'll see how that ends up coming about. Now, guys, we do have the market mentorship tomorrow night. I will be moving that over to Thursday nights instead, so that way it gives us kind of room to review everything. But I will be going live every single Thursday, okay, at what time that is? 11 Eastern. Yeah, so every Thursday I'll go live on 11 p.m. Eastern, and we'll be reviewing everything we went over today and all the outlooks. So that way, you know, if we got something incorrect, we can review that together, grow from it together. If we got something correct, we can review that together, see what we can do better next time. Okay, so I will be seeing you guys again on Thursday. And so yeah, we'll recap on the XY on Thursday. Well, let's go to Dow. Dow. Dow's been really nice as well. Okay, so Dow. Let's go to the monthly. Dow, after taking out April's high, we've been just moving towards the downside. Personally, again, I mentioned this, I want to say like 2 months ago after we took out this high. And I mentioned that I wanted to see some shorts back into this area. We may get that. Like, this could be our whole range internal liquidity level, right? On a monthly perspective. That area really gets my attention. I talked about it once we got it in there. And personally, I do see that being a relative objective. Something relative to shoot towards. Okay. Now, we are pretty bearish. You know, I know you guys see this accumulation here, but right above that accumulation, we got another distribution. We didn't just get a distribution. We came into this previous area of distribution, took out internal liquidity, distributed on the weekly, and continue melting to the downside. Now, I was pretty bearish to start out the week. Just to begin with, I was pretty bearish for the week. The only thing for me was these double bottoms. Okay, you guys see that double bottom right there? Boom. We're not gonna worry about this objective. This is way too far to even think about it. So yeah, that is a possibility, but it's way too far to even like remotely consider it. Okay, so we got this range currently. On a weekly perspective, we've been trading right above these equal lows for about 1, 2, 3 weeks. Okay, and so the highs also have been respected, previous weekly highs, and current weekly high has been set. We didn't really take out much liquidity on the daily perspective. We just been falling. So you have to ask yourself, okay, if we already came up to this previous weekly opening gap, right? You guys can see this is a previous weekly opening gap. Okay, if we've already traded into that previous weekly opening gap, rejected, okay, swept all these previous daily highs here, respected that previous weekly high, all right, respected that previous weekly high, which, by the way, I'm just going to take out because I mentioned that on Monday. This is something that happens in indices all the time, and you'll have an area marked out and one indices will hit it and the other one won't. For example, this bearish imbalance here on the daily, that's the same bearish imbalance I was looking for on SPX, right? And we did trade up to it on SPX. On Dow, though, we completely avoided it. Okay, and you guys will see another example that I got on that. But usually what I mean is, if you have two identical areas that you're anticipating to get played, swept, ran through, whatever it may be, or rejected from. You have to understand this. If you do an intermarket analysis, which if you trade any of these assets, I believe that it will highly benefit you to do so. Run an intermarket analysis. If you're running that between all three of your assets and you're noticing that some of your assets have similar areas, watch those areas, because the likelihood is that one of them will hit it and the other one will not. Write that down. If one of these areas, identical areas, again, that same daily imbalance was there on SPX, same one, Dow completely avoided the area, SPX distributed from it, and then accumulated up to it and traded way through it, right? So two very different reactions. Dow failed to even trade up to it. Okay, I'll show you guys another example of that today, or earlier for Tuesday's morning session. Okay, so now we failed to come up to the previous weekly high. We rejected from the previous weekly opening gap to the downside. Then Monday opens. Okay, Monday opens. Notice, we trade up. We failed to sweep a previous daily high, anything. All we do is trade into some insufficiency here on the 4-hour and melt to the downside. Okay, now we were looking at that imbalance here on the 4-hour across the board on Monday. We did achieve previous daily low from it. Now, earlier today, I wanted to see some longs out of this area here. Not gonna lie to you guys. I wanted to see some nice longs, potentially take out all that liquidity. But that's not the case. That is not the case here. You guys can see, give me one sec. Okay. We had this 1-hour order block here. Right? And we had this 4-hour imbalance, and you guys can see it a little bit better here on the right. Okay, you had a 4-hour imbalance, a 1-hour order block. And so when we were here this morning, we were waiting for, as always, is 10 a.m 4 p.m jeez 10 a.m So all we're waiting for is 10 a.m. Okay, being patient, being very selective. Okay, but this time around, there was news at 9:45. So here's my rule. If we have news before 10 a.m., between 9:30 to 10 a.m., I'll trade after those news impact instead of waiting till 10. So this time it was 9:45, I believe. So we'll go to 9:45. And I believe it was PMI. So there's 9 a.m. right there. 9:15. Here is 9:30. Okay, here's the opening price today. And here is 9:45. Now, me personally, I was waiting for 9:45. Okay, so at 9:45, once we got this nice accumulation, check this out. We got a higher high after the open. Okay, this imbalance here and the order block needed to be respected for me to look for accumulations. And you guys can see here, we had a lower low, lower high, lower low, a failure to create a lower low, right? A failure to move lower. Respect of this 1 minute imbalance, respect of the order block. Okay, then we got this higher high here, shift in structure here. We had a failure to create a lower low, shift in structure right there. And then we had this 1 minute imbalance. This is where I personally took my first entry. And I put my stop loss below the low of the imbalance over here, just in case we wanted to come back to that imbalance. I gave myself a little bit of room. Now, when we started coming into this area here at about right here, I did take some off, but only because I wanted to add more on. Okay, I didn't want to go break even. So there's two ways that I manage my. There's a couple of different ways that I manage my trades, actually, not just two ways. Couple of different ways that I manage my trades. But if you guys know my break even rules, I don't like going break even too fast, especially if price action has not really came into the area or spent too much time in my area. So I don't like spending too much time on the smaller time frames, following structure, trying to find a way to break even. I like to be less exposed to that level of risk or to that level of thinking of where moving my stop loss is an option, because it's not. I have a plan, and if that plan presents itself and I can execute on it, then I will do so. But you have to understand this. If that plan is not present, I won't take the trade. That's it. That's as simple as it is. If that confirmation isn't there to go break even, I won't go break even. Now, here's the thing. For me to go break even, I need this is a 1 minute entry. So I need a higher high, higher low, higher high. So I need one higher high, one higher low, one higher high. Okay. For this whole thing to work out, I need at least one higher high, a higher low into my area, and a higher high. Okay. So personally, I don't like the 1 minute. So I always wait for at least a 5 minute continuation. Okay. So we go to the 5 minute. I take some partials here. I take partials so I can go break even, basically. So my stop loss stays in the same area, and let's actually, I'm gonna show you guys how I manage my stop loss. I think that's probably gonna be the best way to really like give you guys a good way of how I take my trades. So I take my entry, stop loss stays the same. I take some partials here. Instead of going break even, if I was to, so I partialed out right here. If price action was to come back, hit me out on my stop loss, and then back in my way, then I'll get back in. But not just that, if my stop loss gets hit, I don't lose a thing. I completely break even at this point. Okay, so now again, took some partials. Okay, and we mentioned this 4-hour imbalance. Remember, we had that 4-hour imbalance that we were looking at. We came into that new weekly opening gap. We rejected to the downside. We had this 4-hour imbalance. We're looking for more shorts to the downside, right? Looking for these very easy relative lows. Remember, we already determined that we're not moving higher. Monday could have went for that previous daily high, but it didn't. Tuesday as well, but it didn't. We're not moving higher. We're not looking to go higher. We're looking to move lower. So now looking at those lower time frame targets to the downside, looking at this 4-hour imbalance, I'm looking for distribution out of that 4-hour imbalance. Now this whole range right here, from this low that swept these equal lows right here, equal lows, equal highs. Right? You guys see that range from that low to that high. Why those ranges? Because they swept liquidity, right? They swept liquidity. That's my range. Okay, so we have this whole range. Okay, now when you're moving lower, okay, for me, guaranteed targets are within the same area. So if I'm looking for accumulation and discount, a target in discount is a for sure thing. Okay, now for bearish, I'm not gonna always be looking for premium. Okay, sometimes the range can be pretty large, and this whole 50% and below, okay, can be all the range that we, as far up as we go, right? This could be as high up as we end up going for the rest of the week. Okay, so when you're looking at bearishness, this whole discounted area, you're gonna look at the 50% and above on that whole discounted area, and you guys can see that imbalance is right there, that 4-hour imbalance right there, right? So now we go down into the smaller time frames one more time. We have our objectives. Now here's the thing. Okay, I added some orders here. Okay, we came into this imbalance. We created this high. Okay, this imbalance here, once we tapped into it, created a new high. My stop loss went from here to the low of the imbalance. Went from here to the low of the imbalance. It didn't go break even. It didn't go anywhere. It went to the low of the imbalance. Okay. And I'll show you guys why. That's why I don't go break even. That's why I don't go move my stop loss so fast, because we came back. Right? We came back and I added on another trade. So I went in here. I went in here. Okay. Now that we have taken out liquidity here, guess what? This area took out liquidity. Came into a 15-minute imbalance. Right? And created another imbalance right here on the 1 minute. I added my last position right here. Stop loss below the low of the imbalance. At this point, this entry, the stop loss for all of them go below the low that swept liquidity, because that's going to provide my strongest level of support. So now I'm break even here, and I'm not even break even here or here. And here, we're at the final position, imbalance, and we're right out. That every re-entry gets closed out right there. Every entry got closed out right there. That's how simple it was. Simple trade following simple structure, imbalances, liquidity, right? And the reason I didn't want to hold beyond that is because I'm overall looking for shorts. I was overall looking for shorts. So then I believe we did end up distributing out of that area very nicely. I wasn't a part of any of the shorts. It wasn't something that I was in my scope personally. But yeah, no, we distributed. Look at that imbalance. I didn't even look at today's price action, but just look at that imbalance there. These equal highs too. So we'll see what ends up happening, but oh wow. Yeah. Anyways, I haven't looked at Dow too much. Fell through the floor though. Really nice price action. See how imbalances just get respected all the time? Really, really interesting stuff. Anyways, that was my Dow trade for today. I did get clapped yesterday on... I did get stopped out yesterday. I believe on S&P longs yesterday. Yeah. So I try to long it in this, opening gap right here to that previous daily high, and price action just never wanted to leave my area. It kept coming back and coming back. So I did enter over here on this imbalance, and price action ended up just moving sideways. This right here are the times where I'll pay myself some, or if I don't like price action, I'll just go break even. I just won't even touch it, do anything with it. I'll just go break even. If it takes me out, it takes me out. But I do have moments like that where, guys, like ideally when you catch an entry, you want price action to explode in the opposing direction. Okay. But if very simple targets are being left behind and dodged, or more liquidity is being created to the upside, be aware of that liquidity, because the likelihood is that we're just gonna come back for your area one more time, right? And so when price action moves sideways and keeps coming back, that's when I personally stay out. I'm willing to try a trade twice, but beyond that, I don't think a setup requires you to attempt it 3, 4, 5 different times. I strongly believe that if you get clapped twice on one setup, that is enough to tell you that one or two things are incorrect. You're biased, you're on the wrong side of the market, or you're taking impulsive trades and you're not managing accordingly. The second one tends to be more common, but less spoken about. The second one, guys, I don't know who needs to hear this, but I promise you, if you're taking 2 or more trades within a 5-minute period, you're probably looking at the market way too close. If you are taking the same setup and it's running in profit, that's cool, compound. But if you're getting clapped, how can I say this in a very nice way? Professional way. Your daily risk should not be thrown at the market within a 10-minute period. Okay, you shouldn't blow your daily risk parameter, like your threshold, whatever your plan says. My plan says 1.5%. Okay, so if my plan says 1.5%, but I blow through that 1.5% in 5 minutes, that means that I don't have any more to experience the market. And the goal is to have quality experiences with the market. So if we want to have quality experiences with the market, but we're blowing our whole daily risk on 5 minutes, then how can we really endure long enough to learn and absorb from the market what it's providing for us, which is experience, which is what can't be taught. It's the only thing that you have to go out there and earn. And so if the one thing that you have to go out there and earn is experience, then you need to focus your plan on making it so you can last in the market on live trading environments for the longest period of time that you can without exerting your pockets and yourself emotionally. Whoever said that trading is a get rich quick thing is crazy. All right. Mohammed said, what do you think about new trend that is going to about 90-minute cycle? A trend on a 90-minute cycle? I have no idea what you're talking about. You're going to have to be a little bit more specific with that. When you enter a trade, you want to see Bin Laden bomb. Yeah, no, that's a horrible reference. You guys are so funny, but when you enter a trade, you want to see price action move in the opposing direction. Now, if it doesn't move the opposing direction and you're already in a trade, guys, accept the risk. You should not. If you're going break even right away, you're taking too much risk. You shouldn't have entered a trade that you're just gonna go break even on, because then that means you're not accepting the level of risk. You're just making impulsive decisions, deciding whether something feels right or wrong, letting your emotions decide whether something feels right or wrong. Like, that's not the way. I promise you that you're gonna hurt yourself a lot. Okay. You're going to hurt yourself a lot. So what I encourage you guys all to do, if you ever find yourself having difficulty holding on to a trade, if you ever find difficulty managing your assets, remember that most of you on this call already know how to look at and study a chart. Stop focusing so much on the confirmation side of your plan and start focusing on the trade management and self-management side of your plan. Okay, most individuals already on this call already know enough of the market to be profitable. Believe it or not, it is the trade management side of things, the risk management side of things that you're not focusing too much on, and that's what you need to bring all of your attention on. If you've been studying the charts for 3+ years, you've studied the charts enough. What you need is to self-determination, self-examination, a self-evaluation before going into the markets. One, making sure that you're okay to handle the risk, and if you're not, what level of risk is okay for you to handle? What level of risk is it okay for you to take and then just let go of? Have you guys ever thought about that? Like taking a trade and just letting go of that thing. I didn't like a lot of the trades today. I still took it, right? Not always are you going to find price action the most sexiest looking thing ever. It's not always. I promise you guys, it's not every day that you guys are going to find price action looking like that. Sometimes you're just going to come to the conclusion, okay, that price action has to be given the room to breathe. Some of you may have already realized that. Some of you may still be struggling with that. But today's lecture is all about letting your trades run. Okay? Allow yourself, your plan to roll out all the way. Because otherwise, if you're not letting your plan roll out all the way, how the hell can you say that it works? So now, outlook on the market for the rest of the week. For me, Dow Jones, I've been short from the beginning of the week. Once we get to these equal lows, that's it for me for the week. That's the objective, these equal lows. We can potentially get some longs out of here, but for me, the overall scope of the week is to hit those double bottoms at 33 whole level, 33,000 whole level. Okay, that's the whole scope of the week, is getting to the 33,000 whole level. Shorts all the way for me. We may stall around, but notice we got all of these equal lows right there. So once we hit that area, I'll reassess. I may not trade once we hit that area. Okay. For NASDAQ, check this out. We were aiming for that monthly high, what is that? August high? Yeah, the high of August. And we just barely dodged it. Look, we just did not want to hit that. Which is fine. We can still look for some more longs, right? At some point, but just realize we got this equal top here on the monthly. Okay, we got this equal top. We got the sweep of the previous weekly high, and now we're rejecting towards the downside. So now we have to ask ourselves, okay, we swept previous weekly high. What are we rejecting down to? Okay, and we have quite a bit of imbalances. To me, this imbalance still looks very likely. As we're heading towards the equal lows on Dow Jones, I anticipate NASDAQ to do something similar and head towards the lows. We've been running up for a while, so that imbalance gets my attention for NASDAQ on the shorts from this previous area of distribution that swept the previous weekly high. This 4 hour really gets my attention, but most of all, look at that new week opening gap. That area gets my attention for these shorts. So this is my whole bias for NASDAQ for the remainder of the week. That's kind of like where I want to see most of my trades go down to. If we do make it down here, I'd be really surprised. Let's look at a previous weekly low. Yeah, I'd be really shocked. Let's look at that imbalance and see what happens in there first. Then we'll determine the rest of the week. But really, I think this week's main goal is to get the lows. Now look at this 4 hour imbalance on Dow. We were looking at that same 4 hour imbalance on Dow and on NASDAQ. NASDAQ has that same 4 hour imbalance. Dow came back to it, NASDAQ did not. Look at that. Dow came back for it, NASDAQ did not. On the other one, SPX came back for that imbalance, Dow didn't. Okay, just remember that. When one asset comes into that common area, the likelihood is the following asset won't. Okay, so anyways, guys, I'm gonna wrap it up right there. Let me check out the chat real quick. Do you guys have any questions, comments, any charts that you guys would like me to break down before I wrap up the call? Yeah, you guys see the outlook for the most part though. DXY, we got areas to hit on DXY. More longs on DXY, a little bit more. Dow shorts, NASDAQ shorts, and we'll see what happens once we actually get it in those shorts. Mama said not a real trend. I mean, new topic on Twitter. People are talking about price moves in quarters. Yeah. So I've been hearing a lot about the market crashing and all of this stuff. Look, guys, when it comes to all of these things, I will tell you what. I've been trading for almost 4 years live. And not once has social media ever been right about anything. Like about the market crashing, about time. Like, we cannot time these things. These things, if they are going to happen, they're going to happen whether we do something about it or not. Now, the only thing that you can control is what you do about it. Like, how do you position yourself to win in a critical situation? How do you position yourself, your family, your friends, your loved ones in a position to win when everything hits the fan? And that's where this all comes in. Now, if the market does turn around from here, hey, like, cool. I don't believe that the market moves in quarters. I feel like that would be too easy. Like, if I could just go, if I can go long, if I anticipated, this whole quarter to be bullish, and I could just go long at the beginning of the quarter, I feel like a lot more people would do that. Just next time you guys hears about stuff like that, just ask yourself, like, if that was truly the case, wouldn't more people take advantage of it? Like, wouldn't it be a lot easier to follow those quarterly shifts? Right? So if there are quarterly shifts, if there is seasonalities, if there must be something to it, right? It's never just seasonalities. It's never just, a trend that was created on a quarter. Because if that was the case, it would be a lot easier to trade. So yes, I believe in seasonal tendencies. Yes, I believe in quarterly trends. Have I personally found success utilizing either one of those concepts? No. So I guess really long, short answer is I personally haven't found success following those quarterly seasonal tendencies. But there are supportive confirmations that you can use for the future. It's just not something that I personally worry about at all. But yeah. And one more question. If you were bullish, would you expect Monday to go lower? If I am bullish, it just depends, right? Because if I'm bullish, then, for example, here we go. Let's go on a bullish week on the weekly. Okay, so last week was bullish. Okay, this is Monday. Okay, so if we anticipate Monday to come lower, Monday moves lower, then climbs higher, right? But you can see here, Monday spikes up, down, up, and then moves to the upside. So if you anticipate, it doesn't matter what time frame. If you anticipate bullishness, this is what you need to look for. Look, this is going to be this right here is the weekly opening. If you're going to anticipate bullishness, then you should see something like this for the weekly. Manipulation to some level of resistance to then the distribution of orders. Okay? If your weekly looks like that, then the Monday daily, you're anticipating Monday to come down lower, right? So hold on. Let's do this on a 5-day thing. Like Monday, Tuesday, Wednesday, Thursday, Friday. Boom. If we're anticipating a bullish week, we anticipate Monday drop, to bullishness on Friday. Okay? So we got Monday, right there, and then Friday over here. Okay? Now, this is how Monday's going to open. Monday, because we're anticipating Monday to come down, Monday is going to do what? Higher high, low, close. Right? This is where we're anticipating price action to move lower. So then Monday, so this is your weekly, this is your daily, right? And so you have to follow these on every single time frame, right? And then you have New York session. If I'm anticipating New York session to accumulate and go higher, then I'm going to see New York session open, right? Accumulation below the open to then run up higher, right? So we're going to anticipate the opening price, accumulation to take out liquidity, 10 a.m. hits, boom, boom. Right, you guys see what I mean? So it's all about not really caring about what time frame it is and seeing the same thing playing out again and again and again and again and again on every single time frame, and just watching every single time frame the way that you do the daily, the weekly, the monthly, the same way that you guys treat those higher time frames. Begin to treat the smaller time frames in that way, and a whole new world will open up to you, I promise. Anyways, guys, I am gonna wrap it up right there. We've been on here for about an hour. I appreciate you guys being on here week after week, day after day. I'll catch you guys on Thursday. Okay, and remember the 6-month program. Okay, you guys can hit me up on the link below. Book that session. I look forward to speaking with you guys. I look forward to meeting you guys and working closely with you guys. Going 6-month program, working on dedicated one-on-one sessions, and just sharing my experiences, my past years of experiences with you all. So again, I'll see you guys on Thursday. Hit me up for that 6-month program. Hit me up if you guys have any questions. And now remember, we are here to spring forward, right? Drop in the comments down below. I will spring forward. Hashtag spring forward. All right. Take care, guys. Have an amazing rest of your week. We have the outlook. I'll see you guys on Thursday. Peace. Yo, psych, I totally didn't see those that question asking me to break down EU. So we're gonna break down EU real quick. I know I was just leaving, but I'm gonna break down EU real quick because I have 2 questions there that I totally missed, and I don't want you guys to think that I'm ignoring you. So first question was thoughts on EU. Yeah, everyone's probably gonna leave after that. It's totally fine. If they catch it, they catch it. If they don't, they don't. Okay, so thoughts on EU. We've been pretty bearish for a while. We came below that previous monthly low. That's beautiful. Yeah, that's so funny. Out of this whole range, we're dropping down pretty hard. You know what? Let's look at this on a 6-month perspective. Very interesting. Very interesting. You know what? I will definitely be a little bit cautious with EU. Shorts seem to be what's playing out. On a daily perspective, I'd be looking for more shorts as well. On a weekly perspective, just looking at this previous weekly low right there, that just makes a lot of sense. The double bottom as well, that double bottom, if you have been targeting shorts this week, that's a very logical area to continue to look for. I'd be in total agreement for shorts for the remainder of the week above these Asian highs. What would get my attention, guys, is this imbalance here. If I was looking at EU tonight, I'd look for shorts out of that imbalance right there. into those equal lows, because we got a lot of equal lows, a lot of liquidity to the downside, and it looks great. So I'm short on EU. Could you explain what a breaker candle is? Is it a candle that changes structure? Yes. You will usually find breakers at the extreme highs and lows, at extremities, because they can't just be in a continuation. So for example, this one right here, higher high, higher low, higher high. This candle broke structure. It is the bearish candle right here. There's also recordings on my YouTube. It's called the ABCs of Smart Money Concepts playlist. You guys can find the breaker video on there. I go through it on much greater detail. But basically, it's the one that swept liquidity and broke structure. Okay? Swept liquidity and broke structure. This is a bullish breaker right here. It is the bullish candle. You can see that we get that tap rejection away from it right there. Anyways, yeah, sorry about that, guys. I will wrap it up right now, though. Appreciate you guys again. Take care and have an amazing one. Okay? Peace.